Hello, everyone. How are we doing tonight? The bot was lagging a little bit there, starting to piss me off right at the end of that little solo. It's a little bit not nice, I guess. Looking for the word for it. Can I get a quick confirmation that you guys can hear me and see me? I'll see my screen. Awesome. All right. Well, definitely a weird one with our first BA review of the week this late in the week, right? Usually, when there are weeks like this with no high impact very early, we tend to do, I tend to host a midweek analysis. To be honest, I wanted to this week, but the schedule's been a little bit crazy, so to say. So we haven't had the time this week. This is definitely something that will be coming back. I do want to let you guys know we will do some more midweek analysis on weeks like these. But to me, direction going into today was very clear. All right. How is that? Well, how do I look at any given week? I want to see our extremes form. Where is the highest probability early in the week? That's simple. So Monday or early Tuesday, which in my book means before New York session. So what I would call overnight trading, most people would call, that is when the highest probability of one of our extremes of the week will be formed. So in bearish conditions, our high of the week. In bullish conditions, our low of the week. What happened right here on Tuesday? We swept previous week low. We've discussed this multiple times as how this is a more important level than any other random level. What else? Well, if we look at our premium and discount range, we are in the first discount and efficiency. And that comes to how I view price, right? I don't view this inefficiency as a discount and efficiency. This is at equilibrium. Whatever we do within this fair value gap doesn't give me any information. And that is, of course, my mentality. I am the only one that does this. And it seems to simplify things 1,000 times. So my first discount and efficiency, right? Discount inverse fair value gap, we are within. We have taken out an important level in liquidity. We are now ready to distribute higher. Now, that distribution higher, could it end at this fair value gap? Sure. But I'm not trading Wednesday, right? Well, I personally did. And, you know what? Let's get into it very quickly. On Wednesday, price is unclear, right? It could keep going up or it could keep going down. So what am I going to do when it's unclear? Well, I'm going to trade intraday draws on liquidity, right? Relative equal highs equal lows. I'm going to target purely liquidity and be very aggressive with my take profits. Cool. But going into the next day, after that we've gone all the way back down here and closed all the way up here. What does this tell you? Well, my higher objective was not this fair value gap. If not, we would have kept expanding lower and stayed lower, kept going lower. We would not return all the way back up here and form these wick candles. I'm forgetting, I believe there is a correct term for them. I do not have one, right? But when you form such a huge wick, that's a rejection. So you went all the way back down here and then went all the way back up. So what's my next higher objective? Well, of course, at this point in time, you might say, well, okay, it's going to be previous day high. That is the easiest, simplest way to look at it. Now, you could also go a step further and say that, hey, perhaps it's going to be going back into the premium of my latest expansion range lower. So my latest bearish range, first premium and efficiency, which would actually be this inverse fair value gap. Sorry about that, guys. But that is long term. Am I anticipating that it one day will get there? No. Could it get there? 100%. But my first objective and the place where my biggest take profit will be, for example, will be previous day high. And then anything past that is just a runner. That's how I go about things. So going into tomorrow, I had two objectives. First off was going higher to previous day high and past, right? As we're going to see as we go down the time frames, but also looking for retracement into our range since we are within resistance, I guess we could say, within a bearish fair value gap. So understand that both long and short setups are in play. but I need to build a framework around this. So I'm taking my bias and building a framework around it. Let me remove some of these prices. Well, actually, you know what? We're going to keep them. We're just going to remove settlement here. This is our day. You can see from this indicator by, well, Power of 3 Pro Plus by 2 degrees. Sorry, had a blank right there. That's nice. What did you do? Well, anytime you would look at a day, you'd look at it always in the same manner, right? Power of 3. What do I see here? That's all consolidation in my book, right? Why? There's no SMT on the lows confirming that this can be anything other than consolidation. Now, I'm saying this, but looking at this, it does seem like we did not take it out on NASDAQ. So there was actually SMT. I am mistaken in this sense. But if you see, that is far away, all the way back here, which was already taken at this point in time. So it's pretty much invalidated SMT. So still SMT, yes, because at this point in time, it's still the same thing. But, well, I mean, it's not to be regarded in any sort of different way. It's just if you were trading London and looking for a setup there, that would have been unfortunate. But what I see is inducement of this liquidity, right? Very precisely, that's what I see. What did you do? You induced this liquidity. And yes, of course, on a shorter term, especially with SMT in mind, this is the SMT that generated this move, that created and justified this move. But does it mean that this is not equal lows because there was SMT? No, it just means that for now, we don't have to revisit them. Later down the line, we will. So you have a consolidation followed by a manipulation. And yes, you could justify that this slight move down was a manipulation and then trade along, right? If you're trading pre-market. But going ahead at 9:30 and we had 8:30 news somewhere right here, which as you can see, Judah swung higher from our 8:30 news. Now, I do want to just confirm, actually. I believe we had 8:30 and we also had 10 a.m. news, which was existing home sales, which was an orange folder. But we had 8:30 unemployment claims, exactly. So 8:30 news, Judah swung higher, especially with unemployment claims. I never engaged before New York Open, so before 9:30, because it tends to always be a delayed Judah swing. What did we talk about also? Previous day high. At this point in time, our news took out this level. Did we take it out on both? Yes. And there is no higher time frame SMT at this point specifically. I could go and look probably here. Yes, at this point, there is 15-minute SMT, but I feel like I'm becoming a little too precise when I go back that far. I've said it multiple times before. I prefer more recent price action to give me some detail. But if we're looking at it from a mechanical standpoint, you have news, Judah swing, taking out liquidity, confirmed through SMT. You have a clear objective, relative equal lows, your daily accumulation. That might be a little advanced for most of you, right? That's the type of stuff that comes up. Usually I'm very more simple. So how could you have a simpler approach here? Well, very, very straightforward. What is this, right? You see the purple at the bottom of my screen. Let me draw it. This is London session, 2 to 5 a.m. Is it the true London session? No, it's the London kill zone, London session by ICT. What do you look at this point in time? Well, I want to see the high and low. Okay. What do I know happens 65% of the times? So 65% of the time some criterias are met, it works. And that is purely looking at it from just a mechanical approach. When one of these sides is taken before 9:30 to noon, we will go take out that other level. That is 65%. Brain dead, no bias, no direction. When it aligns with bias, see, overnight, Judah swing, taking out London highs, which means what? London low is your objective. Once more, we have relative equal lows to the left. Once more, right here. Well, more precisely, right here. So you have just an even better target compared to just London low. That's a London framework. You don't need to think any part further than that if you don't want to. Of course, we can always define in depth and continue discussing every single reason, and I could sit here and talk to you for 2 hours why this was a great short. But the best way is always going to be the simplest way. What's the quickest way to come to a conclusion that is right the most amount of times? London framework, overnight Judah swing, open distribution. And of course, we had a huge move to the upside right after, which also gave great opportunity. So today, truth is, you could either short or long. I personally shorted. I believe I shared that in general quite a bit today because I had some plans with my dogs. I had to go take care of them, do some stuff with them, so I could only engage up until just before 10:30 actually. So I took the opening range. Initially, I thought it was going to go a little higher than this and form some sort of SMT because as you can see here, there was previously SMT right along here that we invalidated with the open. So I was looking for us to form some sort of SMT on the highs, but I had missed this 15-minute SMT, which let me just bring that back and let's put that to the right. So I had missed this 15-minute SMT that we had on NASDAQ, which meant that you could start shorting from that point on. Now, did it give you an entry? That is a great question. I personally entered on the retracement into this order block. That is a very aggressive entry, and I was very confident in us going back there. But as you can see, you could have had the perfect limit entry right here. Beautiful unicorn. And let's actually look at it. I believe that's one tick away, actually. I might be bullshitting you guys. Yep. So with a limit order, that would not have placed. And honestly, as a trader, I'm seeing it one tick away. I'm clicking on the button. But truth is, mechanically, that's not an entry. Let's see here. Did we have, I'm looking for inversions because I can see that we had no retracements into any sort of bearish fair value gap until way later. So I'm looking to see if any of these inversions to the left gave you an entry, which I do not see. So unless you took that entry that was a tick, you had an opportunity. But truth is, this was not a rise model. This was me trading where it's going and understanding that part. I do not need and do not limit myself to unicorn entries. This is what I teach to beginners because it is the easiest way to take consistent money out of the markets. But it's not the best way to make the most amount of money. Entry on that little BPR under the order block. Where do you see a BPR? There are a bunch of order blocks and stuff like that. A lot of people have different also definitions, I guess, for balanced price ranges. I'm curious to know what you were looking at. Just the order block you used to enter. Yeah, so these wicks, for example, having balanced this area on both sides. Yeah, overlap of two candles. Yeah, a lot of people regard those as balanced price range. Sure, I'll take that. But yes, for me, it was really just the retracement into the bearish order block. I had a very simple trade just looking at this and had a quite large stop loss. So you could have seen me if you saw the screenshots I posted today. I had 5 micros, not macros, 5 micros on this trade. I understood I was trading the manipulation. That's what I was looking for. I was looking for us to go all the way down to these relative equal lows. More specifically, I had these relative equal lows right here, which aligned with, previous PM low. This is what I was looking at specifically. But we also did reach all the way up here, as we saw in our 15-minute chart, I believe. We had some beautiful equal lows right there. We did not reach previous day low, which was a little surprising. But you had SMT, which we'll discuss in a second here. As I said, no clean rise model short right there. And even going into later in the day, there was no clean entry to go short with a rise model, right? Because what do you need? You need a bearish breaker. Okay, well, let's look at our bearish breaker, the first one that formed in the New York session. And let's not do purple so we can see something. Breaker block right here. Okay, when does it form? When we trade below right here. What entries can I take? Inversion fair value gap or fair value gap? Oh, well, you do have an entry right here. What is my objective? Well, partial would be already happened. And what else? Well, I could go target these relative equal lows. What's my 3 PD array stop loss? Right here. Does this give me 2R? No, not a trade. Final objective under 2R, I can never allow that. And anyways, after taking out this liquidity, let's say, for example, you did trade this. If you took out this important level, London low, you can frame reversals here. So you should at least be break even at this point in time, even though the return is not there. Truth is, I'm never going to consider shorting here. Where were the entry? Here, possibly a continuation here. Anything after is too late in my book. Awesome. So see, first expansion, continuation, anything past that is too low probability for me to consider. Now, you did have an entry here. Looking purely mechanically, what did you have? Well, a bullish breaker. Right? Do you have, well, you've just taken out an important level, right? You've just taken out London low, which also aligns with relative equal lows. Let's look at a yes here. Do you have SMT? Well, no. Do you have SMT on a higher time frame? Yes. Right? So you don't have 1 minute intraday, but I believe that at this point in time, we were looking at this low perhaps, but we'd have to go at it. But as you can see, there was SMT even further down in the day. So I believe we were right there. If I'm trying to draw it with precision, you have SMT showing that ES is the stronger asset currently. So you have everything that lines up for you to go, long. That's what my bot did today, my trading bot. It went long out of this fair value gap. But as traders, we will have one thing, which is we can think. And what do you see here? Well, inducement. Very simply, the reason for me not taking that long, well, first of all, I wasn't even, I was short at this point in time, so I wasn't even considering longs, just managing my short. But the reason for me not going long here is because we would have induced this low. For example, I was short, I saw this inducement, and I only saw this move higher as, well, that was too deep for my liking for stop loss. But what did we do? We induced the lows to retrace to our first premium inefficiency, premium order block, to then continue lower. So we just needed to retrace before continuing lower. The only difference we did was we had to retrace and then we continued. Induced the liquidity below, which were our very big equal lows that we saw in our 15-minute chart earlier. So that's how I would have filtered out this trade. Well, let's be pessimistic, right? I like doing this with you guys. I longed right here, even after we respected our first premium inefficiency, which this is very hard for me to justify to myself, but whatever. We have an inversion fair value gap right here. We have a fair value gap right here, and then my third PD array will be the fair value gap right here because we already invalidated this one. Wow, definitely a worse entry the more I look at it, pretty much. Looking right here, that's a stop loss. Obviously, you would have had a partial somewhere here. 1.43 for a partial is fine and offered enough risk to reward towards opening range high. Let's imagine you got stopped out there. Well, you got an opportunity right after. You might look at this and say, well, where's the breaker? Of course, you could have waited all the way to this one, which is the first breaker that you can see directly if you're not comparing to ES, and then taken the first entry, so the first retracement into an overlapping or in close proximity PD array. Then you have inversion, fair value gap to the left, fair value gap, giving you your 3 PD array stop loss rule right here. I would have looked for a partial at this high. Why? Because that's a retracement high. That's an important part in market structure. And then everything past this is going to be high resistance up until opening range high. So I would have looked for a partial here. We can also do it, but you'll notice that actually everything lined up within my model. That's how it was made. What is my first 5-minute premium inefficiency here? Liquidity. What is this liquidity? Exactly the partial we talked about. So whether I explain it to you guys that, okay, well, this is my objective because after that, everything is high resistance, or I give you the mechanical approach, which is current expansion range, 5-minute chart, first premium inefficiency when I'm going to be going long, first discount inefficiency when I'm going to be going short. And that always lines up with being the right objective. I did want to showcase that very quickly, but would look for a partial here, and honestly, would not have stopped you up, right? Because you're not putting in break even before the partial. Perhaps after this consolidation, trailing it up to this level, right? Just the lowest strong point in the consolidation. After taking profits, break even, then go next. If you had the perfect entry, you were fine. If you had a little bit too high, right? What is this? Well, 7 handles too high. You shouldn't be entering 7 handles late to a trade, in my opinion. You could have held on all the way and it would not have reached the final objective, but you'll see right here that ES did reach opening range high at this point in time, which would have meant you had SMT here and should close your trade at this point right here. So you would have had, let's just say, to a maximum of 7R. Very beautiful setup there. I would have loved to be able to trade it. I wasn't there, unfortunately. What I did want to discuss about is this right here. So there are lower time frame breakers here, but am I going to go down to the 30-second chart? No. What can I do? Look at ES, see that actually on ES there is a breaker block, swing low, swing high, manipulation, breaking the low of that range, and then distribution taking out the high of that range, which forms this breaker block, and of course gives you this entry. But I always say that I only want to be trading NASDAQ. In this case, ES was just stronger asset, but even then, I tend to get better risk reward on NASDAQ, so I still like to trade the volatility of NASDAQ. So what do I do? Well, at the same exact moment, ES has the entry. I click on NASDAQ. So let's just use the close of the candle here, be pessimistic, or let's actually use the high of the candle. You had the worst possible entry in this time. Well, you still had a great entry. Because if your markets are correlated, which you should only be trading when they are, which means if there's not SMT on both sides of the range, if it's not consolidating or search and destroy, we had clearly an expansion day here. Well, you have a beautiful entry nonetheless. And yes, looking at it at NASDAQ, you have the same movement. The only difference is we did not form a swing point at this point in time. So you had a little consolidation here. But if I go down to the 30-second and look at the exact same price action, I have a beautiful bullish breaker right here on NASDAQ. And even perhaps here, actually. It's kind of hard to spot, but yes, right here. But see, going down to 30 seconds and sometimes 30 seconds breaker, sometimes 1 minute, that's a little hard and a lot to manage. But in this case, you could have just used the entry on ES. And of course, I'm going to frame my stop loss based on price action from NASDAQ. So I'm going to look right here. This had yet to be invalidated. Well, inversed, I guess. So this I cannot use. I have inverse fair value gap here, fair value gap order block, bringing my stop right at this swing low and giving me a total of, well, looking for 4.5R. So that actually led... It was a nicer trade in terms of delivery, but actually led to less returns than the later entry. So definitely a lot to think about here, but you can't be results oriented, right? This was a setup. This was a continuation entry, which I could have taken, especially due to the fact that there was no breaker on yet on NASDAQ, which oftentimes means that I'm missing this entry. So I allow myself to take a continuation there. To the Essence breaker. So I'm guessing you tried to write ES and it just auto-corrected you. Price did not return to the breaker. I don't need it to. All I'm looking for, the breaker for me, is just a range to look for fair value gaps with. So this fair value gap is overlapping with my breaker. And I don't even need it to overlap. I need it to be in close proximity. I give exact numbers in my mentorship, but just a fair value gap or inversion fair value gap, which I would regard this one as a unicorn as well, in close proximity. Right, looking at this specifically, I'm going to draw both lines. All I'm looking for is a retracement into it. And as you can see from the line right here, we retrace into that fair value gap. Using the entry on ES on NASDAQ gives you all the opportunity you need. Of course, there are inversion fair value gaps along the way that we retraced into it right here. That could have given you a little bit of an easier entry, or you could have waited for the pure NASDAQ entry this point in time, which my stop is actually too tight on this one. It would be here. So looking at the final possibility, which we had SMT on that high, that's actually 3.6, and right here we have like 3.92. So relatively similar trades in terms of return, actually. And as for the rest, you had a short opportunity, you had a long opportunity, you had another long opportunity. Why the fuck would you be looking at your price in the PM? Here, I would never short unless this is taken. That's step one. Why? Because we have reversed in the AM. Clearly, we've done, what is that, 80% of the way, 90% almost of the way, and now we're slowing down. No, I need us to take this, and then perhaps I can trade lower moves, whether they are retracements or continuations lower, right? Expansions lower. But how much did we move today? Well, let's say we moved 300 handles in one direction. I'm trying to get out of there. 300 handles, well, 400 handles in one direction to then do pretty much the same in the other direction, 360. Do you actually believe it has more juice into it? No, that's the truth. How? Average ranges. And of course, I'm not going to go in depth about it, but we were looking at 1.82 today. So today was over average. I'm not anticipating a 5% or 2% or 3% day because those don't happen often. And yes, there was SMT at this point, and perhaps you could have justified having a lunch trade short, which would have led to you entering right here and a quick stop. Stopped on SNT, giving you another opportunity for a low-hanging fruit. So I guess you could have had a loss there. But if you traded in the morning, there is no way you should have been trading in the afternoon, in my opinion. I am a big believer in the one and done. And truth is here, the only reason why you'd be looking to trade the PM is because you're mad that you missed a piece of that. You had 400 handles in both directions. There was ample opportunity to. So truly, if you did not do well today, it's about reviewing what you did and not looking for more trades. The Rise Statistics membership is available directly on the website, which we are going to update very soon. You can find it in official links. You'll find our Rise Statistics. Is it for semi-newbies? Definitely look into it. I'm testing to see if all the information is easily accessible to all. But definitely don't be scared to tag me at any point in time. Me and Emil, a lot of the members of the community, we're all here at all times. So tag us in general whenever you need, and we're always more than eager to help out, if that makes sense. If you have any questions, also don't be scared to open a ticket in support. You'll find it in the welcome community, the welcome group, category, and you can open a ticket to have a private conversation there. You guys have a great night. I am super tired. I'm going to take it easy tonight. So you guys have a great night. Good luck trading tomorrow. We'll see each other tomorrow night for our PA review. Bye, guys.